Alright, guys, good morning and happy new year, third day of the year. We're looking at Bitcoin right now, and looks like Bitcoin finally broke out of this downsloping trend line that goes back since October 6th of 2025. That was the first hit there. Second hit was back in October 28th, and then we hit it again here, the third hit on just yesterday. So we'll see if this is going to be the confirmation candle that we're waiting on. So it needs to confirm above yesterday's high of around 90,927 or 90,925 to be exact. And if it does, then the next target would be all the way up here at around 92,805, the midline of this parallel channel. And if it could get past that, there'll be some resistance all the way up here at 94,646. And then if it could get past that, then it could go all the way up to potentially piercing 99,326, maybe even going to $100,000. Maybe even going to this other midline of this parallel channel of 101,572 if Bitcoin could rally up. But yeah, we'll just have to watch this closely how it unfolds. But yeah, basically if this comes back in and then goes all the way back here at 86,787, that would be the third hit of that level, in which case you could still go long there, but you just don't want it to go below 86,000, I would say 86,350. So if it goes below that, then the next level would be here at 85,087. So right now, this is still kind of a bear flag. So what it needs is a close above 90,500, 500 and 90,000, 91,000. So if it could close above that, then um, Bitcoin could definitely go higher from there. All right, so that is pretty much in the nearest term, but in the big picture, this is still a bear flag. So there's a smaller bear flag right here that's happening, and a bigger bear flag right here. So midterm, it is still bearish. Near term, kind of bullish, just because it has this up move and then this sideways consolidation. And it looks like it's starting to unfold the near term bull flag that could bring price up all the way up to 92,628 in the coming days. So if you're long some crypto right now, that this might be your chance to get a pop on those picks as long as they're not too risky. So be mindful of the market cap. The bigger the market cap, I would say the more stable it is. Or if, let's say, worst comes to worst, if we get another correction, mid caps, I mean, small caps will be the ones that gets hit the hardest. People will just dump those. Mid caps, they'll get hit pretty hard too. And large caps would get hit, but not as much as small caps or mid caps. So something to keep in mind when investing or trading. And then this one right here is potential head and shoulder. So if you take a look here, this would be the left head, the left shoulder, the head right here, and this could be the potential right shoulder that's forming here. So that's why I drew this trend line here that connects this load here, basically like the neckline here. So if price were to come back there, that would only be the third hit, in which case it may not trigger. So I would go long there, and maybe it'll bounce all the way back here. But right now it broke out. So how to play this is, let's say if price pulls back down to 89,268 or 275 or something like that, then I would go long there. If we zoom in to the 4-hour chart, it actually already retraced back here. You guys can see it retrace, and now we're getting a bounce. So if this were to retrace again, maybe back to 89,104, then I would go long. So I'm gonna go ahead and actually set it up right now on one of my accounts. Let's see here. Yeah, on this one, on the funded next, for some reason they're not letting me trade crypto until until tomorrow when futures open. But at least on Goat Funded Trader and my other accounts, yeah, they're okay with trading crypto 24/7. So that's where I'm gonna be doing the limit orders now, just to kind of automate things so I don't have to think about it. And when price does get there, then it will automatically buy it for me. That's the nice thing about setting your limit order. Okay, so the price is, let's say if it goes down there by 8 a.m. today, it's 89,131 or 89,150. Put it on buy, and then stop loss. I would say if it goes below, let me see here. If it goes below 89, let's just say 89,000 even number. If it goes below that, then I stop out, and then the next target would probably be all the way up here at 93,000. I'll just put it 93,000 even number. So I'm risking about $1.50 per share, whereas I could be potentially earning $38.50 per share. So I want to risk all the way up to, ooh, 100%. So about $15 on this trade, and on the other account, on my other live account, back here. So on my other live account, I could risk a little bit more. Um, I usually like to risk about minimum $75 on this one per trade, just because it's a bigger account. So it was 89,000. Just gonna be copying this trade. So 89,150 is the price where it will buy buy Bitcoin. So 89,000 would be stop loss. 93,000 would be the target. So if we put it at $75 on this trade, about 6% of the portfolio, I could be earning about 19.25 on this trade, and only risking about 75. So that's the nice thing about position sizing. It's like you never want to go all in on any trade or any investment. That's just not a good thing to do, because if the trade doesn't go your way, you're only risking 75. But if it goes your way, then yeah, you're earning a lot more. That's the nice thing about position sizing. You're risking the very minimum uh for the maximum gain that you could potentially earn. And then on this one, I'm risking at least 65 because this is a smaller account. And there you go. So if it goes there, if it goes down there, then it would trigger. But if it keeps going higher, then it's all good. I'm probably just gonna look to short this at some point. RSI on a daily still not overbought. So yeah, I'm rooting for this to really shoot up if I'm gonna go short this. Like, if this gets like a huge pop, like that would be like just like a vertical move to the upside. That would be like a 10%, 11% move to the upside. I mean, we've seen Bitcoin do that from time to time. I mean, it's rare actually to see like a 10% move to the upside. More like maybe a 5% on a single day. But like on a weekly time frame, if we take a look here, we've had Bitcoin do 10% move right here, like 10% right here, 10% right here, even right here, 10%. So yeah, 11%. So it's uh it's not like it's unheard of that Bitcoin gets a surge of about 10% in a week. It can happen. We just you just gotta watch the charts. All right, so the next thing I wanted to go over, aside from Bitcoin, is U.S. oil. So U.S. oil right here almost looked like it broke down this upsloping trend line. This is minor support. Um, it closed the day like this, trying to retest 57.51. So Next week we could be retesting that and maybe even getting above it. But this is still not a confirmed breakdown just because it did not confirm. I mean, after this down move, it immediately went up. So if we zoom out to the daily chart, we did not confirm below the Wednesday, December 31st candle because it did flush all the way down here on almost filling gap fill at 56.53, but we are now bouncing back up. He even went to as high as 57.93, but was not able to hold the gains and pull back, and that resulted in this candle that looks like a doji, which means equal amounts of buyers and sellers, uh, which means it's like an indecision candle. So next week we could either go down, maybe fill in that gap fill, and then maybe we'll get a bounce back to 57.52 before going lower, or we may just get back into the trend and potentially retest $58. And if it's able to break out, this is also starting to look like a bull flag here. Up move in the sideways consolidation is a bullish pattern. So there's actually maybe a higher probability that this might break out from this downsloping trend line. And this downsloping trend line goes all the way back since June of last year. And we've hit this twice over here, 3 times right here, 4th time right here. So 5th hit right here. So this trend line is starting to weaken at this point. So by the 5th hit, there's gonna be like a 60% chance that we're gonna break out, and 40% chance that it won't. And the more it hits it, the higher the probability that it'll break out. Okay, now let's take a look at gold first. The reason why I wanted to show you guys gold's price action is because precious metals are mostly following gold's price action. So gold was up a little bit, and then silver was up a little bit as well. But then, as you guys can see, it looks like it's forming it's definitely forming some bearish signals here. So on December 30th, it was able to move as high as 4404, as you guys could see, long wick, and then the small body right here. That indicates that when it went up to 4404, sellers came in and brought the price all the way back down to 4338. That's why you see a small body right here. And it almost looked like an inverted hammer or a topping tail, which is a bearish signal. And then before that, we had a bearish engulfing candle. That's the most bearish candle you could ever get in trading or investing, or just from looking at the charts. So when you see something like that, that's like a warning sign that more selling could ensue. And we're seeing these reversal candles right here, bearish reversal signals. After a bearish engulfing candle, we saw like a topping tail right here where price was able to go up initially, but then got pushed down and closed the day with a small body. It's not good. And then this is a doji candle, not as bearish as the bearish engulfing candle or the topping tail. And then we had another topping tail right here where price was able to go up initially early in the day and then was pushed back down. And then it is now below this upsloping trend line that's kept the price up since pretty much September 4 of last year. And it's hit this trend line once, twice right here, 3 times, 4 times. I guess we could consider this like a 4th hit right there. No, 5th hit right here, and that this is like the 6th hit or even the 7th hit. So if gold won't be able to recapture uh, this trend line right here at around 43, 47 and move higher next week, then we could potentially see another drawdown of about 5.43%. There will be levels along the way to go long, but watch out below because um, we have a measure move target, and this is the measure move target here that could bring price all the way to 41.21. So that's why I already have these levels drawn out. Just because price was able to get above this level, went below, went above, went below, and then got above, and never really retested it again after it started going higher from here. So those are the levels to watch for gold. And then silver. Silver kind of similar in terms of like price action, um, but um, but not quite because silver has had more of a steep move to the upside compared to gold. So silver was playing catch up while gold was pretty much just um going higher slowly. Look at silver's price action; it's a lot more vertical compared to gold. So if we measure the price action, I mean, if we measure the amount of gains that gold's had, I mean, silver's had since pretty much only November of 2024, it's gained about 71% before it started correcting here. And if you compare that to gold, since November 28th, gold has gained only about 17%. So yeah, silver, this big candle right here, 9% move to the downside. I mean, it was able to go as high as 83.75 before reversing the entire move. So it even pierced this level right here when it went down like over 9%. And then it had an over 5% move the next day. And then another 6% move, just reversing the entire move to the upside. And then this candle right here, it's looking like a doji candle, where there's equal amounts of buyers and sellers. It's very weak, um, but I think it did manage to close. Oh no, it did not manage to close above the trend line, at least on the 4-hour chart. So this is not good for silver at all. If we break this trend line next week around $71.77, this could go as low as uh $60. You see this sideways consolidation right here that would provide as some type of support for silver if it goes down there. I mean, even right here, there'll be support along the way, but yeah, I would probably start accumulating when it goes down here, $67, and then $65, and all the way down here at 50, 59, $60. And if it keeps going lower, major support would probably be around $55 right here. If it goes down like this, not in a straight line, of course, that rarely happens to trading or investing. But yeah, expect price to probably go like this and then bounce and then like this, bounce, and then maybe one more leg down. Maybe yeah, to either $58. If it gets really steep, then yeah, it could go to $55. But my guess is $59 will be the target, as it also coincides with this level that's connects the lows from April 2025, the lows from August here. So that would only be the third hit if silver's price were to go like this. So if I were to draw that out, if silver were to go like this, then bounce, maybe back here, and then down here, then bounce back there, and then it's probably gonna go like this, then another bounce, and then probably gonna go like that or something, and then this is where I would buy. Or yeah, you could start buying like right here, even right here. It's dollar cost averaging. And then, so yeah, my TikTok live just ended again. I don't know why TikTok likes to interrupt my live stream. That is crazy. It's like, dude, all I'm doing is just talking about technical analysis. This is not financial advice, just to let you guys know right now. Okay, and then let's go ahead and take a look at the Magnificent Seven. Tesla, as expected, Tesla's now been down for 7 days in a row. So if we get one more flush down on Tesla next week, maybe it'll go down to 426, in which case I will buy. Um, this area has only been hit 3 or 4 times, so there's still a chance Tesla might get a bounce, maybe all the way up here if we extend this line um down here. So if we get a bounce, maybe it could bounce all the way to 454, 455. Or maybe if it gets a huge bounce, maybe it could even fill gap fill here 475. Um, so those are the levels to watch for Tesla. So yeah, Tesla would you would wanna look to buy Tesla, not short Tesla right now. So if you were short Tesla right here at 498, then yeah, you would have made a lot of money on that short already. So it's already down like 12%. So if you had shorted up here, then you're good. You probably would have started unloading your shorts little by little already at this point, and then now preparing to go long. Nvidia, on the other hand, it had a nice pop intraday and then reversed the move entirely. There's gap fill right here if this keeps going lower. But then again, this is starting to look bullish. So up move in the sideways consolidation implies that maybe we could get another move to the upside of about, let's see here, of about 13%. So if Nvidia could get another 10% move to the upside, then it could go all the way to 218.88, which is going to be a new all-time high for Nvidia. And then um, let's go take a look at Microsoft. Microsoft was down 2.21%. It pierced this level right here. And this is level that goes back here since November 25th. Hit it again the second time on December 16th. So we may get a bounce on Microsoft, maybe all the way back in here to 484. If it can't, then you have some levels right here, 468, and then 464, and then all the way down here at 459. But if it breaks that level, watch out below. This thing could go down significantly, maybe back to 448. There will be a huge gap fill here at around gap window at 424, and then gap fill would be at around 397.5 or 395, somewhere around there. The meta was down into support. This is starting to look bullish. Consolidation, so up move in the sideways consolidation is bullish. So as long as it holds 640, then gap window won't be reached. 625 would be gap window. Gap fill would be around 615. Google right here, it looked like it formed a doji candle, meaning there's equal amounts of buyers and sellers. It was able to go as high as 322, 2323 before reversing the move and then coming back into this basically into this level here. So this was resistance. So it was able to break out, but then it wasn't confirmed. So it came back in, meaning if this continues to go lower, this could go to 308 again, in which case you could go long there. That is gap fill. This is also starting to look like Nvidia's chart where it's had an up move in this sideways consolidation, implying that we may get another 7% move to the upside, and that would be a new all-time high for Google as well if it plays out. So always remember, just because it's starting to show bullish consolidation or let's say bearish consolidation doesn't mean it has to play out. There's always a chance that the pattern will fail, and when it fails, the price could move in the opposite direction sizably. And when failed moves occur, that's usually what happens. It's like you get a move to the opposite direction. You get a big move to the opposite direction. Yeah, the biggest moves comes from failed moves or failed patterns. Amazon here was at support, but this is still looking like on the bigger picture bear flag. So you just don't want this trend line to break. And if it does, then you have some support at 220, and then your major technical support will be all the way down here around 205. And then yeah, if this is able to negate the bear flag, then it just needs to close above 240. And then you have gap fill here at 245. And then yeah, this is actually the measure move target right here. If well, before this move here failed, this was looking like a bullish consolidation until this red candle showed up. So I'm gonna take this off now, this 5% move to the upside. So we are still gonna be watching this level right here, if it's able to negate the bear flag or not. This bear flag has been going on since we bottom here in November 2021. So this is kind of like a couple months of sideways consolidation for Amazon. So I did go long Amazon here with a tight stop. I think I set my stop loss at 222.5. And then Apple here, same type of deal, similar to Google's price action. So it was able to almost, or it appears above this level, but did not confirm above it. It was starting to formed somewhat of a bullish consolidation here until this red candle showed up. This almost looked like a topping tail, implying that we may get another move to the downside. Um, and also this bigger picture here is starting to look like a head and shoulders. That's why I already made this trend line here. That's been hit a few times already, 3 times. So if we come back to 267 next week, 268, it may trigger that neckline that can bring it down another 7% to the downside. So there will be levels along the way in which you can go long. It'll probably go like this, get a bounce, then break down, get a bounce here, and if it starts to trade sideways like that, then that's another bear flag potentially forming. And this parallel channel right here that goes back since April, that would be major level. So watch out below if that breaks. All right, and then the VIX, yes, last week, uh, looks like it's kind of bear flagging here, implying that we may have more room to run in the markets. We'll just have to watch. Earnings season is coming up, I think in 2 weeks, so there will be volatility in the markets, meaning opportunity if you know how to play it. Basically, volatility causes price to go one way or the other. If it goes up and then reaches resistance, and if it's multi-factor resistance, that's a higher probability for success. In which case, you go short that. If it goes down sizably to support, and if it's multi-factor support, then you want to go long that. So yeah, the VIX is telling us that people are still complacent. People think nothing can ever go wrong, nothing can stop this train. So the lower this thing goes, the more you want to go long it. So the way you can go long the VIX is by buying the VXX. So the VXX here, expecting this probably to go as low as 24, 25. In which case I would go long there and maybe you'll get a sizable bounce. Meaning, when the VIX gets a bounce, that means people are getting fearful. Could be something, you know, maybe some catalyst from the news, maybe bad earnings, who knows? But we'll just have to watch the charts as well. In the US 10-year yield, it had a huge pop. That's why the market reversed a little bit. Um, this is also bullish consolidation right here. Up move sideways consolidation implies that we may get another 5.89% move to the upside. So maybe at least as high as 4.327%. So yeah, a lot of people think, yeah, the Fed is cutting rates. Shouldn't 10-year yield be going down with it? Apparently, according to Cheap Market Strategist of Verified Investing, Garrett Soloway, who has over 20 years experience in markets, he's worked with institutions as well, so he knows how they roll. Institutions, they are the ones mainly in control of the the longer term yields. So basically, bigger investors, while the Fed is more in control of the short end. So like the 1 year treasury yields, 2 year, 3 year, maybe up to 5 years, but they're not in control of the 10 year, the 20 year, the 30 year. Investors, are mostly in control. The bond market is the biggest market in uh, the whole equity or the whole markets, like in comparison to the stock market, the commodities market, the forex market, crypto market. Yeah, the bond market is the biggest. So when there's something going on there, then it could affect the whole markets. All right, so let's go ahead and take a look at the S&P 500 index. So S&P closed below this trend line. So if we zoom into the 4-hour chart, it by the end of the day, it was trying to get back in. We'll see if it's able to get back in next week. If this starts to trade sideways into next week, then that will imply that we could be headed to gap fill right here at 67.78. Also going to be watching the Magnificent Sevens. If they start showing weakness, best believe that S&P is going to go down with them, because the Magnificent Sevens have a lot of influence in the S&P, as they have a lot of holdings of Magnificent Sevens market cap alone. That speaks volume. They are like Tesla right here, 1.46 trillion. Nvidia, I think, is the largest one by market cap, 4.5 trillion. Microsoft 3.52, Meta 1.64, Google 3.80, Amazon 2.42, and Apple 4 trillion. So they make up most of the market cap in the S&P. That is why they are able to influence priced a lot. So Nasdaq, same thing. Nasdaq is now below this trend line that goes back since April of last year. So we've hit this quite a few times already. This is the fourth hit, fifth hit right here, and we are below it. There is a smaller parallel channel. The midline of the parallel channel could get hit as early as next week if this continues. And then the lower end of the parallel channel may get hit sometime, maybe by end of the month or sometime in January if this keeps going lower. The IWM um, almost triggered this head and shoulders, but it did get back in, as you guys could see on the daily chart. It did close above the the trend line, in which case this might go up to 251, retesting this down sloping trend line before potentially going lower. But my guess is maybe this will get a pop next week all the way to 251 and then reverse. If this it starts to go like this, that would be bad. That would be a down move sideways consolidation, implying that we may be going lower on the Russell 2000. And then the Dow Jones, it did break this shorter term trend line that goes back since November. As you guys can see here, this was first hit, second, and the third hit broke. So it might try to go up here. This is a major trend line here, as you guys can see. Pierced it, pull back, pierced it here, pull back, pierce, pull back. So not until it can break out of that, then there will be another level here, another level here. So this would be major level right here if it could break above this. And inverse head and shoulders still pretty much intact. As long as this trend line here doesn't break, then the inverse head and shoulders will be off the table, or until it could all this break below this level here, then this would look like a M top instead, which will invalidate this inverse head and shoulder. So these are the levels to watch. Up here would be shortable, down here would be levels to go long on. And then the dollar did manage to get to this level here, but did not break out. But it did since it came back in, it's hit it once, twice. Actually, right here, you could even say this was first hit right here. It kind of consolidated, so that's definitely weakened this level here. At some point, the dollar could break out and may start moving higher from here. And if we take a look from this low here, this is kind of like higher low still. So we could even draw a trend line from connecting this low here, and then there you go. We have a new trend going on. So it's still in an uptrend as long as this trend line don't break and then go here. I mean, technically it would still be an uptrend even dollar goes down to 96, but yeah, stronger dollar would be would not be good for the markets, just like how higher 10-year yield is not good for the markets. So we'll just have to keep a closer look. All right, so that is pretty much it. I hope you guys enjoyed this live stream. Feel free to share with your family and friends. Don't forget to like if you haven't done so already, and stay tuned for more updates from me. All right, have a good rest of your 2026 and your weekend. Bye bye now.